Hey everyone, it's Julie here with TipRanks, and today we're taking a look at two newly IPO'd stocks that come in with unanimous strong buy ratings. So let's get into it. Alright guys, welcome back. Thank you all so much for being here, and TGI Friday. Today we're taking a look at two stocks that are both fairly new to the public markets, both trading for less than 6 months, and in that short time they've already picked up all buy ratings from Wall Street Analysts. So today we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. You can follow along with these stocks over on TipRanks.com or by downloading the TipRanks mobile app by using the links in the description down below. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into our strong buy newly IPO'd stocks. First up, we have Concentra Group Holdings. They trade under the ticker CON, currently priced just shy of $23 per share. They hit the public market on July 25th and have had a bit of ups and downs, but are overall fairly flat since. Their IPO was part of a spin-off from their parent company Select Medical, who remains one of the largest shareholders, and it brought in about $529 million in gross proceeds. Concentra is an important player in the occupational health services market. They offer a wide range of services, including direct-to-employer care and workers' compensation services to more than 50,000 patients every single day. They employ 11,000 people, including affiliated physician and clinicians, and operate from approximately 550 medical centers and 150 on-site medical facilities. They treat 1 out of every 5 workplace injuries in the United States and are partnered with 100% of the Fortune 100 companies. And shortly after the company's IPO, they shared their second quarter earnings report on August 1st. Earnings per share came in at 50 cents, which was a 1-cent decrease from the prior year, while revenue of $477.9 million increased 2.3% year over year. Adjusted EBITDA also increased, and their revenue per visit jumped up 3.9%. Following the quiet period after the company's IPO, we've had a handful of analysts weighing in, coming from JP Morgan, Bank of America, and RBC, to name a few. The analyst from JP Morgan noted that Concentra is a unique asset within the healthcare services landscape with minimal reimbursement risk. This is a significant positive differentiator relative to other healthcare providers. The firm believes the company's customer base prefers multi-scale operators that can provide support across a variety of worker comp regimes. An analyst from Deutsche Bank said that Concentra is a high-quality, unique healthcare services asset, while an analyst from Bank of America identifies Concentra as the largest operator of occupational medicine and on-site clinics in the U.S. With 8 analysts weighing in on the Concentra stock, it does come in as a unanimous strong buy. And their average price target comes in at $29.69, implying an upside potential of nearly 29% from current prices. Looking at those ratings down below, all of them in the double-digit upsides. Low-end price target has an upside of 18%, while our high-end price target comes in at over 44%. For our second strong buy, recently IPO'd stock, we have Rubrik Inc. They trade under the ticker RBRK, priced at $30.50. They came out to the market on April 25th and have dropped over 19% since. Back in April, Rubrik put 23.5 million shares on the market at $32, raising $752 million in gross proceeds. They are a cybersecurity company that built the Rubrik Security Cloud, or RSC. They develop and distribute cloud data management and data security systems, an essential niche in a digital world where more and more aspects of business depend on data and data analysis. They offer an array of products and solutions for enhanced data security, protecting their customers from cyber attacks and malicious insiders. Their RSC was architected using zero trust principles to prevent threats at the data layer. Whether your data is on enterprise systems or on the cloud, Rubrik can secure it. Rubrik has shared 2 quarterly earnings reports since hitting the public market. The most recent just came out on September 9th, and both quarters have exceeded expectations. While they did report a loss per share of 40 cents for their second quarter, that was 9 cents better than analysts were anticipating, and revenue came in at $205 million, growing 35% year over year and exceeding expectations by over $8 million. They also saw their subscription annual recurring revenue grow 40% year over year. Along with the solid report, the company also raised their full-year guidance across all metrics. And we've seen plenty of analysts weighing in following that earnings report, including some from CIBC and Truist. Truist reiterated their buy rating after their strong Q2 earnings beat, saying Rubrik's ability to manage all data types in a variety of deployment environments, increasing number of use cases, technology innovation, and high recurring revenue have positioned it strongly for durable growth going forward. And an analyst from CIBC increased their price target, saying that margins for both the annual recurring revenue and free cash flow were materially better than forecasted. The earnings report and the current robust cybersecurity spending environment confirmed their positive Rubrik thesis. They say that the stock is attractive and should be purchased. Rubrik has attracted 11 current analyst ratings, all giving the stock a buy. And their average price target comes in just shy of $45 per share, implying an upside potential of 47% from current prices. Looking at those ratings down below, again, all double-digit upside potential here. Our low-end price target has an upside of 24%, while our high-end comes in with an upside of 70%. So that is a quick look at two stocks, both new to the public markets and both coming in with unanimous strong buy ratings from Wall Street. Let me know your thoughts on these companies in the comments down below and which one you think has the biggest growth potential. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just showing you what those Wall Street analysts are looking at, so please make sure you always stick to your own investment plan. Thank you so much for watching. I hope you have a great day, and I'll see you back here next time.